Hi, Patrick Russell, EA, with today's caliente topic. How far would you be willing to go to avoid a tax investigation by the IRS? Would you fake dementia? Would you fabricate a hospital stay, complete with around-the-clock nursing care and a feeding tube inserted down your throat? Well, that's what 80-year-old billionaire Robert Brockman resorted to. Mr. Brockman is facing 39 criminal charges brought against him by the IRS, giving Senor Brockman the dubious distinction of conceiving and perpetrating the largest tax evasion scheme in U.S. history. The one-time chairman and CEO of the Reynolds & Reynolds Company, for all you keeping score out there, that's a software company specializing in auto dealership internal controls and accounting, Brockman was charged with conspiracy, tax evasion, failing to file foreign bank account reports, wire fraud, money laundering, evidence tampering, and the destruction of evidence. Yes, they even caught Mr. Brockman destroying evidence, which one could only imagine required a good shredding machine, oil to keep the teeth churning, and a big bottle of wine to make the guilt go away faster. How did he do it? How did he craft such a shrewd, if not downright masterful tax avoidance scheme? It took decades and required moving the money around various offshore accounts that were directed towards trusts that kept its beneficiaries anonymous, allowing for an unfettered portal to show taxable income in on one end and flush out after-tax returns on investments out the other. Sounds easy, right? Well, you sort of need also the exceedingly amiable banking laws one can only find in the subtropical islands of Bermuda back in 1981. The IRS claims Brockman's scheme resulted in the hiding of nearly $2 billion of taxable income. Lawyers for Brockman filed a petition to dismiss the case on the grounds Brockman is not fit to stand trial due to deteriorating health and just an all-around losing of his marbles. This claim is being substantiated, Brockman's team asserts, by a recent hospital stay in a local Houston hospital where doctors diagnosed the accused tax evader with a urinary tract infection, pneumonia, and sepsis. This claim of incapacity is being met with derision and downright skepticism at the IRS. They're calling it a crock of shit is what they're doing. In a concurrent filing, the IRS also filed a civil lawsuit against Brockman claiming restitution of taxes, penalties, and interest totaling close to $1.1 billion. Why are they doing this? Well, just in case the octogenarian decides to kick the bucket or the criminal charges against him are dropped, the civil claim will continue forward, making sure that somehow, some way, Uncle Sam's going to get his money. In the case of death, the IRS will simply go right after the Brockman's estate. What are the lessons to be learned here? Well, first, file your foreign bank account disclosure forms. The IRS now has little trouble identifying foreign bank accounts and are on the warpath for compliance by U.S. taxpayers. The second lesson? Don't be such a jerk. IRS case file reveals how a lawsuit brought against Brockman's former business partners claiming that he stiffed them on earnings is what tipped the IRS off in the first place that there was something rotten in the state of Denmark. A quick way to get a quick answer is by using the comment box below. Until my next pro bono tax webcast, compadres, vaya con Dios.